The lending market in France, I think, is quite healthy, is stable. The outlook is strong, is positive, given all what we have been seeing since presidential elections. The banks are in good shape. They are prepared to lend. We are all aware of the pressures under they are from the regulators and from competition and from technology. And when I talk about technology, I talk also about compliance and things in relation to cyber risk. But overall, the banks are keen to lend against real estate, any type of asset class. The office is really the dominant asset class right now in the investment market and in the stock. Retail, as we know, is under pressure, and logistics is going through a major growth. So banks are following that trend as well. Serviced assets as well have a fantastic opportunity in relation to the growth of tourism, France being strategically located, and also serviced assets like resident retirement houses with the aging of the population. It's more difficult to finance, as we all know, because of the operating risk in relation to those asset classes. Then you also want to think about the type of assets, whether core, value add, converts, spec developments. And you see that in France at the moment there is a growing proportion towards value add and development projects. Typically the market is 80-20, and now the view, at least in offices, is more like 75% for value add, spec and development versus 75% for core and core plus. So there are opportunities everywhere, and the banks tend to be relatively conservative in terms of leverage. So at 60 or 55 to 65% loan to value of today's value, even if rates go up to a significant extent, the bank should be not necessarily in the risk they want it to end up to be, but at least they should be still in safe waters.